Let's do this. Week 30 outlook number 1, beginning with the British pound futures. So, piggybacking or getting back to where we were on the last outlook, we explained that after we have this break of structure here, we wanted to see if this break of structure was going to sustain to move higher towards this liquidity point or these relatively equal highs that we had marked out in the previous bullish range, or were we going to begin a pullback or continue bearish price action to the low side? So now we looked at a few of these liquidity points on the way higher, and the one that stands out the most is the fact that we have a liquidity draw of this liquidity point here. Now, we have a structural action, which we just identified as a liquidity draw, but we also have to take into account the bullish price action continuation, and that is this liquidity draw just a motivator for price to begin or for price to pull back into an area of interest, or is this a liquidity draw to send price actually lower, continuing on with the bearish price action? Now, the area of interest I'm referring to is this price gap, or really possibly could be say the sponsored candle here. I mean, it's pretty much all in the same 100% mitigation of the price gap and open mitigation of the sponsored candle here. Now, this is a valid area of interest to me because we have a previous inefficiency. We have previous inefficient pricing that we did mitigate, which was this inefficiency here. And so because we have this inefficiency that then was in this sponsored candle / price gap was a part of the mitigation of that. So we have an action of mitigation is really what I should be saying. So we have mitigation, and then we have creation of the sponsored candle and price gap upon the action of mitigation, which led to multiple breaks of structure of liquidity points. That means that this liquidity draw here, even though we achieve this target, it is highly probable and highly possible and plausible, if we're looking at it through the analysis of this lens, that if we are to return back to, which we have, this area of interest, we should be getting, or not should, it is possible that we get a very valid response to continue price higher, which would couple to the analysis of reaching higher towards this equal high or this liquidity point target here. So we have two battles going on right now, which makes sense. And usually how I like to think about this and how I'm able to frame up if we're in a battle or not is we really want to see what happens based off of the response to a couple of actions. The first action that we have is liquidity draw, which sends us lower. Then we have the price gap, and we also have the sponsored candle, which is mitigation, and that is supposed to send us higher. And so you can see that as we tend lower and we mitigated 50% of the price gap, we then began to consolidate, which means that there is buyers present in this area. And so if you are a buyer in this area of interest, really, then you can have confidence that this is likely to move higher. And if you are a seller, what you would want to wait for is confirmation that this area of interest fails and we do have a break of structure, or we invalidate this area of interest in order to validate the bearish price action or this liquidity draw in order to send us lower. So, and if we are looking for the liquidity draw, another thing that we have to look for is the fact that there's no entry opportunities yet. We literally have to wait. Like, it would be very risky to enter into sells here. It wouldn't make sense based off of the models that I use. There's just a bunch of inefficient pricing. There's no mitigation post liquidity draw that sets up any opportunities for sells. So the thing we have to look for here, if we're looking for sells, is invalidation, or we have to look for some sort of creation, some sort of mitigation that creates an inefficiency object. Other than that, I would err on the side of looking for continuation of buying opportunities unless this area of interest is invalidated. So, and if we do get the continuation of bullish price action, then obviously the target that we're looking for is the next liquidity point, which is all the way up here, right? This is the last liquidity point before this liquidity point. So if this sustains, this will be the area of interest that sends us to that target, which would make sense and which would make for a banger trade. All right, moving on to the NASDAQ, if it lets me. All right, we'll go to the watch list. We'll do it this way. All right, moving on to the NASDAQ. We finally have success for this trade based off of this area of interest mitigation. we have the mitigation that led to the creation of this area of interest, which we talked about in previous outlooks. And then we were looking for opportunities for price to come higher, but ultimately this was the trade, and everything else was, subpar, suboptimal opportunity to get into this trade. If you were looking, this was the point of entry. This is the sniper shot. This is the point where you wanted to get in order to capture this very, very beautiful trade. And we did ultimately achieve the target that we were looking for, not only this liquidity point, but we mitigated the structural point. So now moving out of thinking about the trade, let's think about the structure here. We said that once we reach the structural point, we need to assess what action is going to occur in order to frame up what price action is going to continue. Well, the action that we have, structural action, is a liquidity draw. So because we have a liquidity draw, we should be looking for bullish price action to sustain. Now, something that is interesting to note is the fact that we do have a liquidity draw. We do have, this inefficient pricing that was created upon this run lower, and that is what's being mitigated now, and we are pushing lower. So once again, we are met with potential battling. And so I would not be surprised if we begin to consolidate for a little bit before we actually move higher or move lower if this liquidity draw fails to sustain itself. But because we have a liquidity draw, what we can already mark out is the fact that all we did once again is shift our structural point even lower. So no longer is this our structural point. No longer is this what we're looking for. No longer is this. What we have now is a new structural point that has been shifted lower based off the liquidity draw. And now we have mitigation. We have liquidity draw, we have mitigation, and then we have basically consolidation. You see this is very, very tight price action. And what we should be looking for is either continuation to break or to continue higher, in which we would obviously be looking for these relatively equal highs as targets because there's a ton of liquidity sitting here. I mean, this should be very evident. Or we get mitigation, break of structure, or an action at this structural point, and then we have some sort of opportunity in form of inefficiency object that's created in order for us to continue lower. So we already have the mitigation here. This is just raw inefficient pricing. We already have the mitigation, and as the market opens, we'll see what happens. But as we have a raw mitigation here, and so what we would like to look for is if this mitigation is to occur, I want to see some sort of action, structural action here. And then in the process of that, I want to see some sort of inefficiency object created in order for price to pull back and send us lower. If not, I highly think that this would start moving back higher to draw into deeper premium liquidity pools to get a very massive sell-off. All right. And then for the Dow Jones, it seems that this range actually is the range that is sustaining itself. So one thing that I would like to note here is that the Dow Jones actually gave a very good opportunity that I missed. So if you caught it, that's great. There was, after this break of structure, the creation of this inefficiency. And so because we have that inefficiency, this entire basically all this price action here is effectively mitigation. That's all it is. We got 50% mitigation close up to, no, actually we got 100% mitigation of this inefficient pricing. And after we got 100% mitigation of this inefficient pricing, that then led to a run lower, and which created this price gap here. So this price gap was the model. If I was paying attention, this was the opportunity to enter in for this sell. And so, yep, the area of interest there. As you can see, we mitigated 50% very, very beautifully. And so if you caught opportunities off of this, you know that obviously we were looking to continue lower. And I said that if this were to break, if this range were to sustain, if we were to get opportunity to send this lower, this will be going lower for a little minute because equilibrium of the range is all the way down at 49,543, which is over 2,000 points away. So that is a very, very good trade. I would not be surprised if this is going to give a few more opportunities for price to come back, or a few more opportunities for sellers to hop into this trade. So we do have the inefficiency. which is the action of mitigation. We have the price gap created, so another action of mitigation, and then we have another price gap created here, so we have action of mitigation, and now we have a tertiary price gap that's here, so I would not be surprised if price were to pull back to mitigate this price gap and then send us lower. All right, so that is it for week 30 outlook number 1. There's a lot of good stuff in here. Watch, rewatch, take notes. See you guys next time. Peace.